Hello to everyone. My name is Standwa and I work in the Easy Properties gang, and I don't know why I started with Afrikaans, but here we are. And today we're all about Kikuyu. So what is Kikuyu? Kikuyu is the latest IPO to feature on Easy Properties. That means everyone can invest in this IPO for as little as R1. And so I'm joined today by our main man at Easy Properties, Rupert Finmore. Give us a shout out, Rupert. You're on mute.
I'm on mute. You started in Afrikaans and I started on mute. That's amazing. It's good to see you, Stans.
Good to see you too, man. And so, I mean, Rupert, today we're just chatting about Kikuyu, which is the latest IPO on Easy Properties. And so, I mean, just to jump straight into it, Rupert, why would the community want to invest in this development?
Well, I think it's very simple. You know, it's another one of these Balwin lifestyle estates. We've again negotiated a really good discount off the independent valuations, and I think most importantly is the rental guarantee that we've got over these properties, delivering a really good net yield. Obviously a great IRR as well. We can chat about that just now. But you know, again, it comes down to quality of product, rentability, all of those things. You know, we can unpack that during the show. But the basic premise is that it's offering really good returns.
And so for the new folks who are not familiar with Easy Properties, I just want to start there. There are no minimums to this property and any other property we offer. Am I correct in saying also there's no entry fees? So people can invest with as little as, 50 cents, R1, and so on. And so that's kind of the appeal in this. But exactly. I would like to start with the IRR, which means the internal rate of return. And so, Roop, if you could just slightly unpack that for us a bit. I mean, it offers a very attractive one from what I've seen lately on the platform. If you could unpack that for us.
Yeah, I suppose like any person who's new to any kind of new industry, there's always this jargon. And I think one of the tenets of Easy Equities and what we're all trying to do within the Easy and the Purple group and all of that stuff is cut through all of that jargon. And so IRR always sounds a bit complicated, but actually what it is it's a good thing to kind of measure both capital growth and yield. So it basically tells you exactly the kind of percentage that you're going to earn on your investment per year, taking into account capital growth and your rental yield.
So it's a nice combination of factors of income and capital gain, essentially.
Yeah, and obviously rental yield being the money that you're getting in from renting out those units. I think while we're unpacking that, there's obviously gross yields and net yields. And so gross yields is obviously the full rental that you get, the full rental income that you get on your purchase price against your purchase price. And the net yield is obviously then taking into account the various costs that you have in maintaining and managing those units and all of that.
Awesome. And now the other point that you mentioned was that this is another Balwin kind of lifestyle property that we have on the platform. And this actually takes it to, I think, about 4 that we've had on Easy Properties. Why do we like Balwin so much? What's the benefit of their assets on to the community?
Yeah, so I think it's a couple of fold. The quality of the developments are particularly good. I think we're lucky in that the Balwin guys really like what we are trying to do at Easy Properties. They're big fans. So they buy into our ethos, and so we are obviously able to then also get good discounts off what they are selling these units at. And I think also, the fact that these Balwin developments offer so much in the way of lifestyle, all the amenities that they offer. You know, a lot of times if you're looking at apartments that are under R1 million, you literally got your little square box and 4 walls around your complex, and that's about it. But I mean, Stans, you've been to a couple of these. I mean, they're lifestyle estates, and they offer a huge amount to the people that live there and own them. And so that obviously makes the investment that much more appealing because of the rentability factor. You know, people like to live in those estates. If you're renting out a unit, it helps drive rental demand, and all of those kind of things add to the potential returns we get out of these developments. But again, I think what we do like about it is the scale that they build these units at, and the real quality that we are taking ownership of.
And we appreciate quality essentially because that just means more demand essentially from renters, and that therefore informs the kind of investment that we get. Am I correct?
Yeah, absolutely. And it also it points to lower maintenance costs, you know, and obviously everything about investing in these properties is managing the units well, is looking after the units. You know, as soon as any kind of investment property gets used or worn or any of that stuff, you know, you obviously have to spend more and more money getting it up to speed to rent it out. So the fact that these units start off with a really great quality of product means that we theoretically spend less money on maintenance and therefore get a better return.
I dig it. And another thing that I came across on the platform when I was looking at this property is that they highlight that they have solar electricity. Now, does this mean that the tenants essentially don't have to rely on Eskom? What is that?
Yeah, so I think that just supplements all of these things, of course. No, there's no such thing as a free lunch. Yeah, so the fact that it does have all of that obviously just supplements the supply of electricity into the development.
So essentially, again, this just then emphasizes the kind of demand. I mean, like if you're a person who's been affected by Eskom, like everyone, we would just love, I mean, a property that's kind of solar powered as well.
Yeah, a bit more off the grid. I don't know that it's entirely off the grid, but there are aspects that are off the grid.
Ah, awesome. Rupert, I'm going to ask you something that's just a bit more like, you know, not as concrete, because I know you've got numbers prepared for us, but I want to ask essentially, with this being a lifestyle kind of property, do you feel as if now that we're in a pandemic and people are kind of keeping things close to home, this kind of property, would it appeal to how the landscape has changed, especially for renters, you know, to sort of keep everyone in the same place and close to home?
Yeah, that's interesting. That's actually a very good question. Yeah, I suppose it does. I guess in some of the more hardcore phases of lockdown, we all know guys who like to keep fit and active, running little loops around their small properties. I mean, we know that Sasha, our legal eagle, I think she ran a 5K marathon on her 3-meter wide balcony. I think she got like seriously dizzy. But again, you know, it offers space, it offers green lungs, urban lungs, as people call it, playgrounds, all of that kind of stuff. So I think it emphasizes the ability to get out there, to get some fresh air. It's got boardrooms that you can have meetings with, the work from home environment. It's got shops, restaurants, gyms, all of that stuff. And so I suppose you're a lot more self-contained when it does come down to these lockdowns. That answers your question.
It does. It really does. And one of the amenities that are important to highlight in this development is that renters would have access to a lagoon. Now, personally, I don't really understand what a lagoon is. So why is that so special? What is a lagoon really? And is this, yeah.
I suppose, I mean, you've seen the big crystal lagoon at the Blyde. You know, so that's obviously, it's the biggest lagoon in the Southern Hemisphere. This one at Kikuyu is actually at the development next door, but all people who live and rent in the Kikuyu development do have access to that lagoon. And I suppose there's water sports, you know, guys can do canoeing and paddle skiing and swimming, and I'm sure they'll have triathlons for those guys who are that way inclined. There's beach there, so guys can sit at the beach and enjoy the little lapping of the waves in this little small lagoon. Yeah, that kind of stuff. Lifestyle things.
Lifestyle things. Cool. And that essentially covers a lot of the lifestyle benefits for renters. And now I'm going to ask a question that Tando Umalo has asked on our Q&A box. And essentially he's asking more about the platform. Are you allocated an apartment, or is your investment, or do you invest based on the average apartment calculations? So essentially, if I were to put in money, am I allocated a specific apartment?
No, so that's a good thing. You know, if you invest in Kikuyu, the Kikuyu IPO consists of 21 individual units. And we know historically that the kind of average investment size across our platform is about 1,300 Rand, give or take. And so what that means is that you've got the 1,300 Rand share across all of those 21 units. And so the biggest benefit of that is obviously diversification of risk. It means that, you know, in this instance, as we know, we've got a rental guarantee in place, which means that the developers believe in their product so much that they pay us rent for 2 years, and then they obviously look to on-rent that into, you know, in amongst their kind of database. But we guaranteed that rent. What it does mean, however, after the 18 months when we are renting out the units and managing them ourselves, if you have 1 or 2 units that are vacant for a period or whatever the story might be, you're still collecting rent on those other 19 units. And so that's why you have a share across all of those 21 units. So you don't get allocated a small share in just one. You know, again, I think we've mentioned it in other webinars, that's having all your eggs in one basket. You know, it's one of the benefits about investing in EasyProperties. Again, if you and I go and buy an investment unit, and that investment unit does not have a tenant in it, then you and I have got to come up with the money to pay the costs and pay the portion of the bond and everything. But obviously, if that's diversified across 21 units and 1 unit's not rented out, we're still collecting rent on all 20. So it's a very important distinction and a good question.
So, but with the rent guaranteed for the next 2 years, if 1 unit is not occupied, Balwin will then pay us or the community as if it were occupied.
Completely. So we will sign a lease with Balwin themselves, and we will get for 18 months the full rental on all of those units. So it's one of the really great things about these rental guarantee investments is that you are absolutely guaranteed your return for at least the first 18 months, and then it's obviously open out to the general market. And you know, it's about maintaining your units, making sure that we have them full. You know, when tenants and their leases are coming to an end, it's about making sure that we're already looking for new tenants before that period and just keeping up those vacancy rates.
Awesome. And Roop, you mentioned costs, keeping costs down before. And so we've got a nice question from Matebe, which is essentially this property doesn't have a property management fee. And they clearly went through the prospectus where we highlight all of this stuff.
Yeah.
And they're asking, so who ultimately is going to bear the cost and offer these services that HouseMe previously offered?
So that's also a good question. You will notice that in the prospectus, there's actually a management agreement that's referenced, that is between EasyProperties and the SPV and the Kikuyu EP9, whatever it is. I think it's Kikuyu EP9, that own these units. So after the rental that we've got in place with Balwin is a net rental management contract. So they will obviously pay us that net amount, and what it amounts to 9.22% net yield. So it's a really, really good net yield. After that period, then again, EasyProperties will manage those units, and there will be a management fee that is charged against those units then. And that's obviously to cover the advertising and rental collections and all of that stuff.
So this essentially means EasyProperties has moved things more in-house, and we're taking care of more of the management.
Yeah, I think it was a lesson that we learned quite quickly, you know, with the companies that were previously going to manage our property portfolio. Obviously got into a little bit of trouble. And we very quickly realized that nobody has got a better incentive to look after these investment units than ourselves. And so while it might have always been a strategy of ours is to build up this portfolio management capability, it just got brought forward probably by 18 months or 2 years. You know, when the previous company got into their trouble. Yeah, and as we've discussed previously, you know, we are going to be in time tapping into the community to look for tenants for these units, because how cool to be able to rent out a unit that you are a part owner in yourself. Again, you know, it's that whole thing of ownership. Doesn't matter whether you own 1,000 shares in your unit for 1,000 Rand or 100,000 Rand, you're still an owner. And it's cool to be able to rent out your own property, you know, that you own a share of. So, yeah, but it's one of the ways that we're going to be able to keep costs down. You know, traditionally, rental management companies charge anywhere between 8 and 10% to find tenants and manage the units. And anyone who's looked through our prospectus has seen that we'll be doing that for 4%. So it's half of what you can kind of pay out in the open market.
Awesome. And we've got another question here from Gosinati. They're essentially asking, besides, you know, outside of Kikuyu, do we have any other properties in KZN?
It's a very good question, and there's one coming. You know, which, as you know, because you also sit on the investment committee, and there's a really nice one coming in KZN in the next little while. We're just finalizing some of the deal metrics, and I think a very exciting one that's coming to or coming from KZN.
Awesome, thanks, Roop. And we've got a question from Brandon, who is essentially asking us to go back to the numbers, which I know you love. He's asking what percentage of rental income is set aside to cover property costs, you know, from levies, maintenance, etc.
Yeah, that's a good question as well. So we make a provision for 15% for the maintenance of these units and for periods of vacancy. People will remember that when we purchase these units, we raise 70% of the purchase price in capital through our IPO on the platform. And we've got a small bond on each of these units for 30% of the value. And so just to cover ourselves, we retain 15% of the rental that we collect, specifically for periods where there might be some maintenance issues, some damage, or a period of vacancy where we've still got to pay a bond. But anything that doesn't get used of that gets returned to all the investors. So if you have a look at the prospectus, and it's on page, let me just see, I've printed these out. On page 32, you will see that there's in the halfway up, it says maintenance reserve released, and that gets released back to the investors if it doesn't get used. So it's also one of the things that is a big difference between a REIT and EasyProperties. You know, REITs often pay 75% of the profits back to the investors. We pay 100% of the profits. So, but yeah, we do retain that 15% just for rainy days.
Awesome. Thanks, Roop. Now we've got some, I think they're a bit more taxi questions here. And so I'm inclined to ask our users to actually speak to a tax practitioner more specifically, because we are not allowed to actually give any kind of tax advice. But the question essentially is, you know, when I eventually sell my shares, and this is from Portia, when I eventually sell my shares, will transfer duties be applicable if my share value is above 1 million rand?
No. So, no. Transfer duty would get paid when we eventually sell the units at the end of the investment period. There will be capital gains tax that gets paid on the increase in the price. Transfer duty is actually paid by the purchasers. So the people, we pay transfer duty when we buy the units. It's either transfer duty or VAT, depending, you know, on if it's a brand new first transfer from the developer, then VAT is applicable. But yeah, you can't get away from death and taxes, and unfortunately, transfer duty is one, but it's paid by the purchasers. So when we sell, we'll have capital gains tax to pay. The company will, and then we'll distribute the proceeds, and then there is obviously dividends withholding tax that is applicable on all of those dividends. If that answers the question.
It answered it for me, so I hope it answered the question for them. And we've got a few more questions as well. So from Shoni Pile, she's asking, how long should I wait after investing? For instance, like with this property, would it be closed in less than a month from now? And so when should I expect the payment? And then I'd just sort of like to take this one, Roop, if I can.
Okay.
So the transfer of the property into our community's hands, Shoni Pile, will take, I mean, Rupert, it can take like up to 3 months, if I'm not mistaken.
Yeah.
And then after that 3-month period, then we can start benefiting as investors would from, you know, dividends / rent income. And then after that, there's also auctions which you could make use of. So I'd say that's sort of the guiding period, if I'm not mistaken.
Yeah, quite right. Yeah, unfortunately, that's, you know, we've got no control over that. That's just the process that it takes to transfer a property from one owner to the new owner in the deeds office. And that can take up to kind of 3 months. So the way the process works, you spot on, Stuns, is once the IPO closes, we've raised the capital, we apply for the bonds. Once the bonds are approved, it goes to transfer. And then once we take ownership of the properties, the company that we've all bought shares in, then we pay the dividend the first quarter after that period.
Love it, love it.
Yeah.
Roop, we've got 2 essential questions about location, and I hope you're ready for this because you might have to show your cards before it's time. But
okay.
First one is from Andile, who is essentially asking, Bloom or Free State? Can we get some properties there?
That's yeah, it's a very good idea. I'm very keen. Interestingly, we haven't really looked at any property in that area as yet. But yeah, we will absolutely, no doubt, in time have property across there. So if there are any people involved with property developments in Bloom and around Bloom, then you're welcome to hit us all up.
Yeah, and I'd love to be part of that little like tour of Bloom, because every time I've been there, I've only seen like one tall building, and that's it. So I'm wondering, what is there to invest in Bloom? But you guys can hit me up and give me some examples. And then Anne is asking, would EP consider investments overseas, Mauritius, for example?
Yeah, we actually are. We're looking at a couple of offshore investments. We've looked at a couple in Mauritius already. There's obviously, you know, been an instance now with some of the Mauritian properties kind of being grey listed. You know, due to some kind of not being compliant with some money laundering laws and stuff like that. So that's not ideal, but we've looked at a few property opportunities in Mauritius and are still talking with those developers. We're assessing some in Australia. We're looking at some in Europe. Yeah, so the short answer is we will definitely be bringing some international property. It's just a bit more difficult for us, both in terms of doing a rigorous due diligence. Obviously, just kind of snookered by distance, I suppose, in a way. But yeah, it's without a doubt high on our list of things to get right is to bring some international property on board.
Okay, awesome. Awesome. And now I'm going to just give two suggestions that we've received essentially from the community. The first one is from Samkelo, who's essentially, the feedback that they're giving is that they'd like to see us push one IPO at a time. I don't know if you have some, but yeah, that's essentially the first suggestion. And the second is from Charles about offering retirement estates as IPOs. So I don't know if you have, some thoughts around that, any plans in the future?
Yeah, so let me deal with the first one first. What we're trying to do is to overlap these IPOs a little bit by a kind of week or so on either side, as one's closing off, a new one comes on. And we aim to get a fresh property, a new property onto the platform once a month and with a slight overlap. So that is what we are trying to do. And with regards to retirement estates, we've been assessing a couple of retirement estates. Yeah, definitely. I think there's some nice returns to be made out of that product. Yeah, so we are, one of the kind of concerns that people have had is, investing in retirement space, an old lady or an old gentleman suddenly can't pay their rent. Who wants to, as an investor, have to go and ask that person to move out if they're all frail or something like that. So we've got a little bit of work to do around that, around making sure that not only are our investments good and delivering good returns, but also are, I suppose, uplifting in a way. But again, the short answer is yes, we are assessing some retirement opportunities too.
Okay, cool. And now I've essentially got just two outstanding questions, and they sort of speak to the same thing. Firstly, from Kosinati, besides dividends, what is the benefit that I can expect from this property?
Particular to Kikuyu, yeah, so the benefits are twofold. When you invest in property, you're looking for a yield return and a capital growth return. And the fact that we buy these properties at a discount to start with means that you are getting a good run at capital growth from the very start. And so I think that's also why it's really important that people always remember that property is a medium to long-term investment. This is not a Bitcoin or a Sasol where you're trying to buy, or a Robinhood kind of IPO where you're trying to buy and turn a quick profit. This is not that. And so in order to get the benefits of that capital growth is to stay in for the 5 to 7 years. Then you're getting your 5% over that whole period, 5% per annum, and you start generating obviously good capital returns. So it's twofold. It's getting a good income in terms of dividends, and then getting a capital growth appreciation at the same time.
Awesome. And then also last question, which is from Tando. She's essentially asking so this is about risk, and what's the risk of loss after making an investment via EP on a property? So yeah, what do you think about risk and risk mitigation and loss?
So I think that's why property's always been a really important aspect in people's investment portfolio. That people always say, as safe as bricks and mortar. There's always an opportunity to lose money. No investment is risk-free, as we know. The nice thing about property at the end of the day is you're buying a tangible asset. There's actually a physical asset that's there, and short of an earthquake coming and swallowing that whole house, that asset is always going to be there. Although there's obviously insurance for that anyway. Yeah. And so while you potentially can make a loss, maybe the property market tanks, or let me think of an extreme example. They find some toxic water source right next to a property we've all invested in. Well, then obviously it's going to be really difficult to sell that property, and potentially one would need to sell it at a loss. But that's one of the things that why people like investing in property. It's not as volatile as some of the other things that markets that we've seen over the last couple of years. And it's underpinned by bricks and mortar, and that's always going to be there. So there's always risk attached to anything, but property is often considered a slightly slower and more steady property investment that maybe shaves off those extreme highs and lows.
Dig it. And so now this actually brings us nicely to this question from Gosana, which essentially is, when investing in property, apart from the first most important thing, well, I guess to them being location, which is more crucial to look at? Net rental yield, gross, location? Which one would you say is the most important?
Well, I suppose everyone's got their own ideas of what they're looking for. Some people are looking for a total yield play. So they potentially buying in areas that are potentially a bit cheaper, that offer slightly less capital growth, but you're going to potentially get a higher yield. And I think of our Green Reef Village investment. That's in Boksburg. Those units we all bought for 499,000 rand. They were renting out at 5,400 plus some additional costs, and so that offered a good yield. Perhaps slightly less from a capital growth opportunity. And then, if I think of the other extreme, when we looked at that property in the Rockefeller in Cape Town, obviously Cape Town property is much more expensive to purchase. And so sometimes it's a bit more difficult to generate a good yield by comparison to some of the cheaper property, but you've got opportunities to generate more capital growth. And then there's obviously things in between. And so it just very much depends on what your investment goals are and what's important to you. And that's why I think the IRR is always a good metric to look at, because it takes into account both of those things and shows you what your kind of earnings are going to be for the capital that you've put in per year of that investment. And so it's a good one to look at when you're trying to weigh up different property investment opportunities.
Awesome. And then in terms of yield, they just want to know essentially, is yield compounded year on year?
Well, no, because it's cash that you're getting in. The capital growth is obviously compounded, but yield is just is rent that you're getting in based on your shareholding. Obviously, there is escalations in a rent, i.e., the rent goes up every year. But no, it's not compounded. The capital growth is compounded.
Understood.
Hopefully, yeah. If the property market still does well.
Awesome. So we've actually got a few more questions streaming in, and I know we need to sort of round up soonish.
No, let's go. It's cool. I'm happy.
Awesome. Another question from Deline van der Merwe is, what is the occupancy rate? Your English just kicked me there. What is the occupancy rate of the properties we've currently invested in?
Yeah, that's a very good question, and it's something that we're actually going to start publishing now once a quarter. We are on the platform. We're going to provide a kind of quarterly report on the occupancy levels, on the vacancy levels, all of that kind of stuff. And so I don't have that figure right in front of me, but I know that we've got over 100 units, and there are probably 4 or 5 vacant units at the moment, give or take. And so the occupancy rates are well into the 90s, which is obviously very good. But I can't remember, you said ask that question if it was Daleen. We are going to be publishing specific information per each of these kind of property investment opportunities every quarter, so that people can just see exactly what those rates are, what the collections are like, any maintenance issues that the companies had to kind of pay for, all of that stuff. So it's all going to be disclosed on the platform. It's a very good question as well.
Very cool. Okay, first time hearing of it, but that's very dope, group. And another question from Brandon Ludick. Since the capital is raised on a 70-30 basis, is security required for the 30% bond value? And if so, please elaborate on this.
No, well, the properties themselves are the security. So that's obviously, the properties themselves are the security, which is good. It's obviously a very low loan to value ratio, so the banks are happy just to accept that security.
Awesome. Cool. So essentially, Rupert has answered a lot of the questions from our community and me as well. But I think that a lot of our community would sort of also love to kind of see these properties in Kikuyu, especially Kikuyu, sorry, now that it's in IPO. And so I want our community to just keep their eyes peeled on social media and on their inboxes, because we're set to send out a few exclusive invites to a few people to join us for an event at Kikuyu. So we'll have more details coming out over the next few days. But stay tuned, guys, and it's going to be amazing. You get to see all of the amenities and touch the actual investment, which is really hard to do in other investments. So yeah, just keep an eye out for that, guys. And that's essentially it from me, Roop. I don't know if you have any kind of closing statements that you want people to remember when they walk away.
Yeah, a couple. I see there's one or two other questions that have popped up here from Matthew around obligations to sell the property at the end of the period. Obviously, those, when it comes time to sell, no, we're not obligated to close out our position. Obviously, the investment periods are between 5 and 7 years. So at that stage, we will take a view on the market and get shareholder approval to dispose of those assets, or potentially relist one of these assets back into the community. It does require a shareholder approval to do that. So everyone who's invested will have that opportunity. I saw someone else posted something, it just popped up on my screen, I don't see it here. Someone asked about Airbnb at the Blythe, which was interesting. So you can still Airbnb the units. Of the 10 units we bought at the Blythe, we've been Airbnb 3 of them, which has been generating some really, really good returns for the investors. I think what Balwin are trying to do, or the managing agents, is that it obviously, from what I understood, has like an increase in terms of the services that need to be offered into those units. More litter coming out, more trash, higher frequency of people coming in and out. And so what they've done is they're just asking people to pay a slightly higher levy on those units that you're Airbnb-ing, which we will do. But again, we'll keep considering these individual investments. Maybe with these increased costs, it's going to be better to get long-term tenants in place. But for the moment, we are still Airbnb-ing those units at the Blythe.
And so essentially that comment came from Martin as well. And he found that he was unable to. And apparently it looks like they aren't allowing Martin to Airbnb his units. So I think that's a conversation he must have with the management.
Yeah, with the managing agents there. Yeah, absolutely.
Yeah. So
so Stans, I think maybe, sorry, those are just 2 questions. I think maybe in closing is one of the things which is particularly good about Kikuyu, and there are a couple of things that I wanted to talk about today, and that is obviously in the prospectus, various bits in the prospectus. There's all sorts of information in the prospectus, but I think 3 things I particularly wanted to highlight was, and I'll work backwards, it was on page 70, it's around about page 70 of all of our prospectuses, is the pro forma income statement, which shows the earnings and the costs and the property rates and all of that stuff, which people can check out. On roundabout page 32 on all of these prospectuses is the 10,000 Rand investment. What that does is it shows the cash flows for this particular property. It shows that if you invest 10,000 Rand, these will be the dividends that you earn, that you projected to earn over the 5 years. It will show you what we sell the properties for at the end of that period, and it will show what your purchase value of 10,000 Rand, what you will get back from the capital when we sell them. And it then shows, in addition to that, the dividends that you get over that period. And then it will show you put in 10,000 Rand and you're going to get out 15,000 Rand and some change. So that's a really important one to look at. And then I think on page 27 is the investment criteria. And that's obviously really critical. And one of the investment criteria that we look at is rentability. And again, what makes it attractive to people, these property investments are reliant on being able to rent these units out. And so the rentability of these particular units is obviously so important. And again, I think we touched on it earlier. That's one of the reasons why we like this Kikuyu as well, is because for somebody who's going to be renting out a 7,000 Rand or 7,800 Rand apartment, this person has got access to the Lagoon, heated swimming pools, squash courts, restaurants, concierge, spas, cinemas, the works, and so it makes the product desirable. People want to go and live in those areas because for 7 grand, you get access to all of that kind of stuff, and the rentability drives the return. So that's just one very important aspect. And then there's obviously things like the location. Waterfall's a really good area. It sits in amongst that kind of triangle of Midrand, Sandton, Four Ways, Rivonia. So it's a desirable area, which obviously helps drive demand when we're looking to sell these units. Our one-bedroom apartments there at Kikuyu are actually significantly less than the average listing price in that Waterfall estate area, which is great. I was having a look earlier. The average price on property 24 for a one-bedroom unit is 999,000 Rand. We bought these at, obviously that's an asking price, but we're buying these units at just over 900,000 Rand. So it's quite a lot less than what the rest of the market is. So it just points that it's a good purchase in a very good area and all of that stuff. So those investment criteria are in and around page 27, but it's also really important for people to check out.
Awesome. Cool. I guess that brings us to the end, and I think we're still getting questions. We're getting shout outs. So we're getting a shout out from Kutlano to Bonolo. He says you're a star. We've also got Nkosana who wants to actually close it for us with a statement. And if you don't mind that I read it out for you, Rupert, and the rest of the community. And Nkosana says, for all of us property investors, cash is trash and property is prosperity. So I want to leave it on that bombshell. Big thank you.
The bombshell is when you actually get that on tattoo next to some of your other tattoos.
Oh gosh, I don't put it in my mind. I might actually do it one day. Guys, this has been awesome. The community has asked lots of questions and you guys have been fun as always, man. You guys rock. And I don't know, Rupert, if you want to close this off for us, then please do.
No, I think that's cool. Cash is trash and property is prosperity. And
that's how we leave it, guys. Until the next webinar, community, we've loved having you. Let's chat again. Bye, everyone.